Welcome everyone to the Realty Debate. Every week we focus our attention on an issue or an important subject in real estate. Today we'll get down to figuring out what's going on in India's largest real estate market, Mumbai. Are sales of homes up or down? Is there more or less offtake of office and commercial space? Are civic amenities and infrastructure crumbling in the maximum city? And is Mumbai losing out to NCR and Gurgaon as the financial capital of the country? My panel, Mumbai and India's top names in realty, Niranjan Hiranandani, founder and managing director, Hiranandani Constructions. So thanks very much for joining us today. Anuj Puri, chairman and country head India, Joan Lang LaSalle. Anuj, good to have you finally in the studio. Balaji Raghavan, CEO and CIO, Real Estate Fund, IIFL. And Sameer Jasuja, founder and CEO, Prop Equity. Gentlemen, thanks very much for joining. I'm sure today is going to be a very interesting discussion, but I'm going to zone into the residential property first because that concerns maximum number of our viewers, and lay down some facts on property prices, how they've behaved in the Mumbai market. If you look at 2007 as the base year, they've risen 90% till 2012 first quarter. Now, Mumbai's market withstood the global economic meltdown quite well in 2008, and prices didn't actually go down at all. In fact, they rose by 70%. The steady, reasonable increase in home prices of Mumbai continued throughout 2009, but in 2010, something happened. Mumbai's realty caught fire. Mumbai Residex jumped a whopping 41%. Now, that kind of rise in prices is difficult to sustain, and that's what happened in 2011. Prices rose another 19% till September, but they finally couldn't sustain the momentum. And the last quarter of 2011 and the first quarter of 2012 saw prices mellowing down and actually coming down by 4% as a market-wide average. It almost seems that home buyers said, we simply cannot afford anymore. The question is, what's happening now? Niranjan Hiranandani, first question to you, sir, because you know this market inside out. We almost saw a sort of a deadlock. The buyer said, okay, I'm not going to move and buy at these prices. The developer said, I can't bring the prices down for many reasons, and we'll come to that. But we also read reports that even though prices were held on paper, big discounts were given away. Now, the question is, how widespread was that news?
I think there is a lot of reality in this real market. I think what has really happened is there was a liquidity crisis. So a large number of developers who had overextended themselves, borrowed long in terms of things, but were unable to maintain repayment of debt. And I think this is across the board, across the country, not only in Mumbai, Delhi, but probably all over the country. And we saw the same in Mumbai too. Those developers who were overextended were in difficulty, had to make sales, and because of that reason, many of them wanted to sell, and some of them couldn't sell them at the prices at which they had bought land. So I think there was a crisis for those developers who really couldn't match liquidity at a particular point of time. As far as the overall growth of the market is concerned, believe you me, that has grown more than 25%. So as a growth in terms of demand, there's a huge growth of demand, but people are not too sure. Are the prices going to go up? Are the prices going to go down? So there was a deferment of closing of sales. So I think putting these two factors together, A, the liquidity crisis for many developers, little tightening up of the investment market, and also the fact that there was an insecurity of the international markets and the local markets, I think brought a little shakedown of a lot of people who did not want to buy on those days.
You know, the figures are very confusing, Anuj. We're reading reports, some say 80,000 unsold units, some reports say 1 lakh. We also, look at absorption rates, and then figures which we read are 37 months to clear the current stock. Now, Niranjan mentioned the fact that it was developers who were cash-strapped who gave discounts away. But then Mumbai developers are sitting on a debt of 6,200 crores. So what does one believe? I mean, how do you read all these numbers and signs?
As Niranjan Bhai mentioned, that there was a huge amount of stress in the system, particularly on the liquidity, on the developers who had over-leveraged. But there were two other factors that combined with it. One was that on the luxury segment of the residential, we saw a huge amount of stock coming in. There was a demand on the luxury segment, but the demand was much lesser than what the supply was getting built up. So clearly we saw some stress in the luxury market. And when I say luxury, in Bombay, it's, apartments valued at in excess of 20,000 to 50,000 rupees per square foot. And that's where we saw the stress. The second stress that we've seen is largely in the Navi Mumbai sector. And, interestingly, there's been a huge amount of speculation that has gone in that market, largely because there was going to be an international airport that was going to come in. And there was, on the back of international airport, there was a lot of economic activity that was going to happen. So there was a huge amount of speculation in buying land and then, apartments being built, which unfortunately have been, sold to speculators who are not really being able to do anything with that stock. So clearly we're seeing, stress in the developers who are over-leveraged, in the luxury market where we're seeing that the supply is far greater than the demand, largely in sort of the South Mumbai location. And then we're seeing one micro market, which is the Navi Mumbai micro market, under stress purely because of the speculation. Other than this, if you were to look at it, the other markets are pretty rock solid. The demand has been pretty much above the supply. And also a lot of the supply that is being shown is really just on paper. Given in the last few quarters, the approval process has been extremely slow by the local authorities, that the new supply hasn't really hit the ground. And due to that, we're seeing that the demand continue to remain higher than the supply, and the price stress in those markets hasn't really come to the developers, and really that has been a boon to many of the developers who are operating in the suburbs in that price range of 8,000 to say 12,000 rupees per square foot, which has been pretty strong with very little new supply hitting the market.
Balaji, would you agree with that summation? That is the luxury market which has got hit, and probably some areas of Navi Mumbai where there was a lot of speculative interest. Other than that, the Mumbai market remains fairly steady in terms of the demand factor?
Yeah, absolutely. I agree with Anuj. Essentially, what we see where there is a problem is where the products as such are beyond the range of affordability. Now, today, if we look at central and southern parts of Mumbai, specific micro markets where prices are upwards of 20,000-25,000 rupees a square foot, product ranges are starting from 3,000 square feet an apartment. Now, obviously, there are issues of affordability as well as, the sentiment being down. I would say a reluctance to buy in these kind of products. However, if you look at the suburbs, the northern suburbs and so on, wherever prices are below 10,000 and a configuration of, let's say, below 1,500-1,600 square feet or so, going right down to maybe 800 to 1,000, sales continue to be robust.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for Retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.